Sundial Growers has been a fan favorite for quite some time now. Just in the last 6 months, we've watched it go from around 15 cents per share all the way up above $3 per share before finally pulling back, and now it's trading around $1.20 per share. Now in this video, we're going to discuss why the stock is pulling back, where it can find levels of support, and if it continues to fall lower, what we should do, or should we buy this dip expecting it to move higher. Now if this sounds like something you're interested in, let's get started. What's up everybody, I'm Clay. I'm here to make 2021 the best year ever. We're going to grow our portfolios together, and we're just going to grow together. Now if you like the content on this channel, please don't forget to click that like button if the subscribe button is still red. Do me a favor, subscribe to the channel, become a bro, and let's grow together. Alright, so Sundial Growers was on an absolute tear over the last month into January, and it's experienced a little bit of a pullback. Now let's talk about a couple different things here. Why was it moving so high so quickly along with all of the stocks in the marijuana industry? It's because with the new administration coming into the US here, a lot of people were hopeful that we would see law-friendly regulation and cannabis-friendly regulation here in the United States that would allow cannabis companies, especially cannabis companies in Canada, to enter the US market and really take advantage of a brand new market. Well, if anybody knows anything about laws, it doesn't happen overnight, and a lot of people like to buy the rumor and sell the news, right? Well, regulation hasn't been happening as fast as a lot of people expected, or as fast as a lot of people would like, so we've seen a pullback overall in the marijuana and in the cannabis industry. Now, is this okay? Look, this is I don't want to say brand new industry, but it is a growing industry. Obviously, there's going to be a lot of headwind when you're experiencing a brand new industry and you don't exactly know where regulation is going to stand, but a lot of people are hopeful that, I don't know if it's going to be the near-term future, but a lot of people are hopeful that in the future, recreational use will be okay and will be legalized here in the United States. First, we have to get to decriminalization, then recreational use, and it's going to be a long process, but there's a lot of people that are hopeful in really backing the cannabis industry and allowing these stocks and supporting these stocks, knowing that they can take advantage of this new market when that does happen. So that's why we saw such a quick rise, especially at the beginning of the year, knowing that the new administration was going to be coming in here in the United States. Now, we did see a pullback because, like I said, things didn't go as fast as planned. And another reason we saw a pullback, especially in Sundial Growers, is because they've been exercising a lot of warrants over the last week. So I'm reading here, and it says, on Friday, Sundial Growers announced that more than 98 million warrants to purchase common shares at prices of 80 cents and $1.10 per share were being exercised. Now, what does this mean? This means that these people are able to purchase new shares, diluting the current shareholders, and they're able to purchase these shares at 80 cents and $1.10 per share. So that's one of the reasons we've seen the stock price continue to fall, especially so far this week on Monday and Tuesday. Now, what else do we have here? The exercise warrants brought in gross proceeds of $89 million for the company, but there's also newly issued warrants at the $1.50 mark. Now, if these warrants get issued, this would bring in another $150 million for Sundial Growers, but it would also continue to dilute the current shareholders. Now, what does this look like? This could be a double-edged sword, because as the company is able to bring in more money through these capital raises, they're able to do things like pay down debt, acquire other companies, use it to grow their business. This is all good when we're talking about expanding a company in a rising or growing industry. So we know that Sundial Growers, ticker symbol SNDL, was able to take advantage of this, and they were able to pay down their current debt obligations using these capital raises and using these newly issued warrants to pay down debt. Now, on the other hand, they've also invested in some other businesses. And it says, the proceeds from the exercise warrants mark the third capital raise for the month for Sundial. Shares are currently up more than 20% in February, but they're down 50% from the month's high on February 10th. And the company's net cannabis revenue dropped 36%, in the third quarter of 2020. So this is, they're not doing as well as they could be, especially with all of the regulation in the United States here taking longer than expected, but they're on the growth path. They're trying to grow, and it says some of the money raised is going towards a strategic investment Sundial announced last week. It took an 18.5% stake in Canadian edibles producer Indiva with $22 million in Canadian dollars being purchased. So they're out there, they're growing their business, they're doing what they need to do to really position themselves to take off as the market allows. Now, yes, we've seen a decrease in the share price, so let's talk about these levels of support. In the last video I did on Sundial and Tilray, we talked about the level of support for Sundial at $1.20 per share, and that's exactly where we are right now. Now look, I never like to buy a falling stock. So if you're not yet in Sundial and you're thinking about entering this position, we want to see it bounce off this $1.20 level if we're going to go ahead and add it to our portfolios. Why? Because it's like, picture catching a falling knife, okay? You never want to catch a falling knife because really you never know how far it's going to fall. Now, if we see it bounce and start moving higher, this could be an excellent entry opportunity, because we do have a level of support here at the $1.20 mark, and if we start to rise, we could see it rise even further and really test the old highs that we were seeing just a couple of weeks ago. So you always want to buy a rising stock, because a rising stock is what? It's likely to continue rising, and a falling stock is what? It's likely to continue falling, at least in the near term. I know there's a lot of technical analysis that goes into it, and growing companies and growing industries tend to rise in the long term, but it's just, there's something about adding a position to your portfolio and being able to make money right from the start that not only feels good, but it helps you emotionally as a trader. And we know that half the game is overcoming those emotions of losing money, cutting your losses early, and really focusing on the winners. So if we fall through this level at $1.20, what should we be looking for? I believe that the next level of support, $1, is always significant, okay? When we're talking about penny stocks, that $1 mark is always significant. So we could see a level of support at $1, but below that, we're looking at 80 cents per share, okay? We could go from $1.20 all the way down to 80 cents per share. Now, this is significant because we can see that it was trading there around that 80 cent mark for several weeks. I mean, we had a nice pause on the graph where we can see that 80 cent is a significant mark, but also these warrants were exercised at the 80 cent level. So this is a very significant level, and we could use it as a level of support. So if we see further decline, check out for that $1 mark and then the 80 cent mark before really considering adding these positions to your portfolio if we get that bounce. Now, I know a lot of people here are extremely excited about Sundial. They're really positioning themselves to take advantage of the market when the time is right. So let us know down in the comments below if you guys believe in Sundial, if you believe in what they're doing, if you like the fact that they have no current debt obligations, they're really positioning themselves to blast off when regulation allows and when investors allow for this to happen. And, kind of where you got in, if you were lucky enough to get in way back in the end of 2020, when we were looking at 60 cents a share, 50 cents a share, or if you're one of the more recent traders who got in and you're experiencing a pullback right now, inspire us with your story. We love to see people who make money investing in the stock market. It inspires the rest of us to be better investors as well. So guys, if you like the content on this channel, please don't forget to click that like button. If the subscribe button is still red, do me a favor, subscribe to the channel, become a bro, and let's grow together. And look, if you're brand new to investing and you don't yet have a brokerage account, or you're thinking about trading brokers, there's a link in the description below for Webull. It's super simple to set up your trading account, and you're going to get a couple free stocks along the way just for doing so, and it's really just going to help pad your portfolio right from the start. And if you guys want to share this video, you can tag me almost anywhere at Claybro. I'd love to follow you guys back and just see what everybody's interested in investing in. Now, until the next time, guys, I hope that each and every one of you have an awesome day.